Hello everyone, welcome to another weekly market review. It's the 23rd of November 2020. Bitcoin is trading at above 18,000. It's absolutely incredible. What a great time to be in cryptocurrencies. Let's have a look at the opportunities. Here's the total market cap chart on the yearly time frame, the monthly time frame, and the weekly time frame. We are at significant resistance. You can see the weekly close is still pretty strong. I would say it's so significant, but this level, this 534 level, what you want is for price to start finding strength above it. As of now, we are finding resistance here, so it is significant, but it is yet not something that is breaking any higher down market structure for you to start betting on downside. Though there is weakness, that is something I'll speak about, but what you want to know is that there was weakness here as well while BTC was trading around the 16,000s. There was a potential to flip bias while this support with this resistance flipped into support. Fortunately, this is the time around when my wife and I got some COVID, so wasn't paying attention. But if you're paying attention, it was quite a clean support resistance flip and a nice place to flip bias and look for further upside. For looking for downside, you can see for now what we've done. The 4 hour, we have made a lower low, but we're continuing to range again. I would say that the momentum still is high enough that price can move about here, possibly even take out these highs before showing some kind of potential downside. For any downside, what you want price to do is to break this level right here, the 500. And I would say if we do something like this and then price comes down here, then this is about where you want to be looking for downside while managing risk from the highs up here. So you want that shift in market structure, because what you can see price has been doing is this is while BTC was in the 13,000s. We ended up flipping bias here as well, taking profits but flipping bias for upside, because you see we did not break market structure. Price continued to range and suggested that there is support again, and this is the same thing that price did over here. We ranged, we did not make any lower lows. So what you want to see for this is this confirmation where first price makes the lower lows, then you can manage risk for downside. Until then, I think we are still in very overbought territory. So to not be overexposed and you're looking for upside exposure, odds against BTC have been doing well, especially the majors. So if you want to be buying dips and scalping dips, should be doing it on the majors for now to catch any kind of moves we have like this over the next couple of days. Here's the altcoin market cap, very clean structure on this. Let's look at it on the weekly, and you can see we bit this beautiful base, came back down, tested it as support, and what we've done is we built a range. Look at it on the daily. We built a range right here, and you can see that price started consolidating right at the top of the range. So what we had then, once price is doing that, is a target for the range which has been achieved. Currently we are right at a big weekly level. You want to look at it on the weekly. So we had a great week for odds, and this is essentially when we were looking at odds against BTC to potentially have bottomed out, and Ripple and Ethereum made pretty decent moves, currently sitting at resistance. So what you want for price to do is flip this level into support, then we can start looking at higher levels. They've been pretty clean, the levels on this total 2 chart. Here's the next big weekly level. We just mark it out as the weekly. It's the next big weekly level. Monthly may be significant as well if price does want to flip this 190 into support. We start looking for further upside, but until then, for now we are at a significant resistance, and also the target for the range has worked out. Bitcoin on the weekly has been absolutely spectacular. We've hit almost exactly the 19,000 weekly close, which was the 2017 big level, and price has hit that. And what I want to show you very quickly is the 3-day. I just want to show you the RSI on the 3-day. This is something that I have shared on my Twitter as well, but it's a ratio, so I don't have the historics, but you can see that we are at the 90 level, and essentially what price has done is hit this 6 times in the last 5 years, and I would say each time that price has hit such oversold levels on the 3-day, it has been a good idea to be selling. Even though we have gotten continuation, there have been some big wicks down, at least 2 out of the 6 times. The other 4 times we got a complete correction. There are the things that have to be in confluence with this, and that's something that I'll be talking about. So here, looking at the statistics for Bybit, I want your attention down here, basically at the footprint for the volume. And what you can see is this is the delta for each day. We are on the daily chart, and you can see that over the last 5 days the delta has been negative mostly, apart from one move which took us to close to 19,000. That was the move where we had, but you can see the delta has been significantly negative. At the bottom is the cumulative volume delta, so that accumulates the delta, and you can see that the CVD has also been negative. What you want to see below resistance when there's accumulation is for this to improve. If it does improve over the next couple of days, then we should be looking at other signs that we are getting continuation. But if this continues to deteriorate, where there is higher volume and higher amount of selling going on, then you should be looking for signs in price as well. For price right now, yesterday we got a dip to 17,600. So what you want for price to do, I mean, whatever it needs to, I still think we can be testing the highs, possibly testing 19,000 again. But if price does come back down and breaks below the 17,600, then that is the next bounce is what you should be looking at to really be looking for downside. But until then, for now, we do have broken market structure on the 4-hour time frame, but price is holding. I mean, what I wanted to show is this one significant thing, that volume is now supporting downside. And there's another thing that I want to show you, which is the funding. Bybit most significantly, this is very, very expensive funding for Bitcoin. 0.2% is extreme. So if it is so expensive and we are at a major resistance, it is going to be very expensive for longs to continue to add when we have sell pressure, which has appeared already. So this is the kind of confluence I was telling you that we are looking for. Last time around 16,000, we did not have such extreme funding. We do have that now at 19,000. So I would say that for Bitcoin, it is okay to still be looking at upside, though extreme caution is required. 3 days oversold, and a lot of metrics are showing that price is reaching a significant resistance where more people are looking confident. A little bit shorting interest is coming up for the first time as well since 16,000. But what most importantly you want is 17,600 to break, and then look for the next bounce and look for downside. Until then, we can range here for a bit, possibly another day or two. While that is going on, there is good opportunities in your large caps. So if you do end up getting another dip, which is close to 18k, possibly high 17ks, you can be looking for upside on Ripple and Ethereum for that test until this is broken. So if we get a break of 17,600, I think the broad market alts will follow too. Alts BTC, if you looked at the fractal that I have shared for alts BTC, it's there on the Subverto Twitter. So just have a look at that. I mean, that's also reflecting we could possibly be reaching the end of this alt BTC bounce for a couple of months. So here's also against BTC, and what you can see is we've been looking at this 2016-2017 fractal. This was December 2017. All right, so that's essentially what we've done. December 2017 was literally when Ethereum bottomed out, took a bit of a bounce, and we had all the way till early March, after the bounce. This bounce was about 15 days, I think, and we've done about a week of that. And essentially we could top out close to the middle of this channel. But if we are to follow something like this, then what happened was that BTC made one more move on its own. When odds against BTC took another bit of a bleed, it wasn't the majors, but if you were looking at most of the other odds, this is the time, late Feb, when they made new lows, fresh lows, and it was looking like it's an endless pit, this odds against BTC. So there is potential for price to be able to do that we get a bit of a sideways on odds against BTC while Bitcoin makes its correction, which means odds will correct along with Bitcoin as well. And then odds against BTC bleeds a little bit more, which is BTC's last move to new highs, essentially, which could take Bitcoin close to 24,000. And that essentially, this fractal suggests that Bitcoin makes that move alone. But once price has done that, the correction Bitcoin makes from there, it is manifesting the biggest move that odds against BTC makes, because 2017 was the only real alt season that we have seen in the history of altcoins. There's been small moves here and there, but this was the real money transfer. So now just understand this, guys, because there is big money that is coming into the system. That is why Bitcoin is sustaining prices of 18,000 and above since days. That's a lot of money that it takes to sustain that. So there is genuine big buying interest. There's genuinely a very large amount of capital that is flowing into Bitcoin. That just has to translate to something like this. It just has to translate to something like this, because that is just the way that this system works. If you've been in cryptocurrencies long enough, you do know that the money has to flow down, and the gains are still in the smaller coins. The gains are still in alts. The gains are still in new frontiers. There's DeFi, and there is a lot of very interesting narratives in that space, which can take so much of this capital into it. It can just eat it up. So just know that we are very close at the precipice over the next 2 to 3 months to a very and absolutely life-changing, potentially life-changing opportunity for everyone. So you should be paying a lot of attention, doing a lot of research, and building your positions for this, guys. If you've been around long enough, this is what we've been waiting for. This is our retirement moment. For the traditional markets, it's been a very consistent theme for us. There's so many metrics that just point to being absolutely bullish. This is something, the statistics here is something that is pointing to what potentially can be something that supports fractal that we have been tracking, and something that's been quite consistent for now. But basically what we have is greater than 65% making new 20 days highs, led to continued strength. Look at 3-month and 6-month and 12-month. Very good returns over the next year. This is what the projections are. What we have is 1 month. I mean, this is still not too big a sample size, but it's not so bad. Since 1990, that's 1, 2, 3, 4, 5, 6, 7, 8. 8 times. Okay, so 8 times we have negative returns over the next 1 month. So that's not so bad, because what I want to show you ahead is something that matches up with this very well. What is matching up is the 2009 fractal. essentially the 2009 bottom fractal. And what price has started to do is something very similar. We started building these waves, but you can see we have potentially a few days or a month of downside, but after that you can see that we have quite a big move that we made in 2009. But essentially what this suggests, it doesn't need to go exactly up and down in waves in similar timing like this. What it suggests is that there is no deep correction. That's what it suggests. Whatever kind of corrections, this is like a 5%, 8%, 10% correction. Whatever kinds of corrections that are coming, market is so healthy and it is so strong right now that everything just ends up getting bought. The breadth is absolutely spectacular, things we haven't seen over the past 5 to 6 years. That's how good the market breadth is. And essentially now the bigger gains are in the emerging markets, they are in the small caps. Very quickly I'm going to show you something which is in relation to those as well. So looking at the Russell 2000, which is the small caps against SPY, and this is the chart I shared in the review 2 weeks ago. And what we're looking at is when price was consolidating above the 200 moving average on the daily time frame. You can see the strong move that we have gotten out of this tight range, but also very significantly you can see that it has been since 2018 we've been a strong downtrend, but essentially we've been in a downtrend since 2014, and we haven't made any progress since 2011 essentially, in this ratio. But you can see since March, we finally ranged, and now small caps are outperforming. This means that there is significant breadth in the market where finally small caps are getting love, and finally this is where the big gains are. So you should be looking at small caps. I think they will continue to outperform. This is very significant. Look at this monthly level. Support. We went up, came down, tested it as support, broke down below, tested it as resistance, but now we have broken up again. This very significant monthly level, price is well above that now. So if there is some kind of a retest, I think that would be a buy, though we've already gotten it. So if you do get a retest of this monthly level on this ratio, that's the time to be getting back into small caps and looking for potentially a continuation of this move. You can see that this has essentially been one of the biggest moves we've got. Like, there's very small periods in time where price has been making progress, where essentially small caps have been making progress. But this is a shift in the market. This is a shift in the basis of how the market has been moving. It has largely been driven by the large cap players. So this is real progress. This is an indication of this, that we have hit a potential bottom in March, and just the fact that the market is going to continue to support whatever kinds of dips that come. Here's the other significant ratio that I wanted to show you. This is copper above, and below is the emerging markets. So this is the other theme, the strength in emerging markets and in copper. Once price is big, look at how well aligned these charts are. So I would say that once price is able to break through these bases and retests it, this is going to be a very, very big move. You can see again, this has been a 10-year base in emerging markets. This is a 7-year base in copper. So this is very, very high time frame stuff, guys, and these are big opportunities. The bigger the base, the stronger the move. So our 10-year base, if price is ready, we can't say for sure right now. If we do, we could range here a bit and we could get another dip to potentially 45 on the emerging markets, and even a dip to about $3 for copper. And if we do end up getting that dip, building another base, but breaking out of here, you need to be in these markets. If you're trading, you're using your money and using your capital, you need to be in these markets, because these are very, very high time frame moves, and this is so significant once price does end up breaking up from here. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!